Hi guys, Steve Crawford from Your Virtual Spending Coach, and today I want to introduce our personal banking and lending specialist offer. First question I suppose you'd ask is, why would you bother using a virtual banking and lending solution? And a lot of our coaches have asked for this especially over the last couple of months, because they've found that their spending and savings component of their offer has been fantastic around zero and engaging the clients. The problem's always been that they've not been able to find a broker or a bank that's been able to implement the banking and the lending side. And so they want a business that's been doing it successfully for the last 7 years to help them out, and obviously that's us. We've worked really hard to make sure that we've helped our clients get great at the money management program side, and up until now we've not had a solution to be able to help our coaches because they just don't have the skills in-house. And we're proud to say that we're ready to be able to do that for you now. What we provide is a team of experts. So myself at the top, obviously working with our team to make sure they're delivering the best possible solutions, looking at our preferred panel of lenders, and then training our planner, which is Chris, and our personal lending specialist, Sarah, to make sure that collectively we're giving your clients exactly what they need. If you choose to work with one of our preferred banking partners, you already know that they can implement the solution that we discussed in each of our workshops. That's talking around multiple offset accounts where necessary, about using different spending, storage and savings buckets, linking them to different credit cards and different bank accounts. And what this does is it increases the chances of them hitting their spending and savings goals. In most instances, the cost of the service is going to be covered by one of our preferred banking partners, and I'll touch on that at the end. So what do your clients actually get? Well, there's 4 components to the offer. The first one's a personal lending assessment, a banking and lending plan. They get an internal valuation of their properties, and then a best fit recommendation, and if necessary, implementation. So what's included in the personal lending assessment? First of all, it shows them how much the market is willing to lend them from a borrowing power report. Now, obviously, clients can jump online and easily type in how much can I borrow. What this does is it actually compares all the lenders on the market rather than just the one that they're looking at that stage. It also shows them the range of rates that are likely to be charged based on how much they borrow. The lending comparison is our way of showing them how their current lender stacks up against our preferred partners and the ideal solution. If required, their credit proposal and preliminary assessment is going to make a recommendation around their best fit lender. And that brings us into our banking and lending plan. So the banking and lending plan is going to give your clients, first and most importantly, an education on how the modern home loan works. Not a lot of banks and brokers actually explain to them how they can use the components or the key elements within their loans to help them pay it off faster. We'll then do a review of their current banking and lending structure to see what they like and what they don't like about the way they bank today. Again, really similar to what we talked about in terms of the concepts in our workshop. We're going to provide an insight to the ideal YSC lending structure and how this type of setup could take years off their mortgage and obviously save them thousands of dollars in interest along the way. Give them a chance to explore how they want to set up their spending, storage and savings accounts using that Goldilocks approach of not too many, not too few, and getting the right amount. Again, designed to help them set and hit their targets each month. And then lastly, if needed, we're going to make a recommendation around a structure that's going to be great for them and help them achieve their banking and their lending goals. Next component is getting that valuation done. First and foremost, it's independent and unbiased, and that's what we want. We want to make sure that it's not just the bank doing the valuation using one of their internal brokers. So this is using an independent valuation company, really well respected, and it's going to show them exactly how much their home's worth. The first of the 2 criteria is what this is. So there's 2 ways that we know that banks assess how much they're going to lend. The first one is that LVR, so that loan size to valuation ratio. If you don't get the valuation right, it has a massive effect on the valuation ratio and obviously has a huge impact on what the clients can effectively borrow in the end. We'll then use those details combined with the income and expense details that you provide to source the best terms up front from our preferred partners. So this is very similar to, I suppose, a pre-assessment from a medical point of view using insurance companies. You want to know who you're going to use up front based on who's going to give the client the best terms. You don't want to get halfway through the process, find out that the valuation's not going to be high enough or the rates aren't going to be good enough, and then have to start it again. So you can see there the best terms includes what the lending limit's going to be and also what the tailored discounted interest rate from each of the preferred lenders are going to be compared to that standard variable rate. Lastly then, it's about making a recommendation and, if necessary, any implementation. So the first thing it's going to give them is an option to actually stay exactly where they are. Keep everything as it is, and then typically what they'll do is they'll probably take the rate that we've been able to secure, go back to their current lender and just ask for a discount. And we don't have any problems with that if that's what they want to do. The second thing is they can stay with their current lender, but they might want to improve their structure by adopting the Your Spending Coach setup. Unfortunately, they'd need to do this themselves because the way the market works, we wouldn't be able to help them because the lenders only deal with who instigated the loan. So that's either their own broker or the bank directly if they set it up themselves. Lastly, if they wanted to, they could choose to implement that ideal setup via one of our preferred partners, which would be our recommended lender. Now we've culled the total market list of about 35, 36 lenders. We took it down to a short list of about 8 or 9, and we brought that down to a preferred list of 3 lenders that we know deliver the solution that we're looking for, provide great relationships. They have a great point of contact for us and for the client, and they provide best of market solutions and fantastic rates. If they want us to do that, we're absolutely happy to do that, and we'll manage that process right through from start to finish. The clients are going to see that they've got choices. That's the most important thing out of this. They're in control. They don't just need to take the loan that they've already had since day one. They don't just need to look at the cheapest rate or whatever's the easiest setup. What they need to be able to do is actually get a setup that's right for them based on everything that they're looking for. Obviously there's a cost with any of this stuff. So you can see here we split it into 2 components. So there's a valuation. That's valued at $400. The cost for this is $50 payable via the credit card if the client proceeds right through to a recommendation where the recommendation is for us to, or for them to refinance to a preferred lender. That $50 will be refunded at the time of the refinancing. The best fit pack. So this is over $1,000, well, $1,000 worth of value. The cost here is $250 for singles and $500 for couples. What it includes is that personal lending assessment, a banking and lending plan, and that's constructed via a go-to meeting with the client where everything's recorded and you've got a copy of that as well. It's going to include, excuse me, a best fit recommendation and any implementation if it's applicable. We're happy to waive the cost where the loan is greater than $300,000 and it's refinanced to a YSC preferred lender. And the reason is, at that stage, we'd obviously be paid a commission from the lender. So that's when we talked about at the start where the client may end up not having to incur any costs here. Obviously, what we want to give them is the choice to stay exactly where they are. If they do that, there's a cost involved in this and they simply pay that cost. So if they choose not to refinance to another lender, that $250 cost for singles and that $500 cost for couples, it'd be charged at that stage. If they go through the refinancing process and the loan doesn't proceed for whatever reason, that cost would be charged at that stage. Assuming the loan's greater than $300,000 and it goes all the way through to settlement, then the clients aren't actually going to be charged any costs at all, apart from that $50 valuation fee, which is going to be refunded at that time. So hopefully you can see a fair amount of value in what we do. If you want any more information, email it through to us at contact@yourspendingcoach, visit the website or phone us on 96465252. Happy to answer any questions and look forward to talking to you soon. Bye.